because I just love financial markets and I just love the ever-changing puzzle that you're trying to put together. But I also wonder, would I have better returns over time if I just bought an S&P 500 ETF or a NASDAQ ETF and just wrote it out for 30 years? Do you think that most investors should spend time really trying to focus on maximizing their asset allocation and tweaking and timing? Or do you think most investors are probably better off buying an ETF and holding it long term?
Well, I think I would separate. There's a question of, should the average investor try to engage in market timing? And the answer is no. Like, the average investor should not engage in market timing. Like, think the best investors in the world are, 55, 45 on this, and they like spend billions of dollars, trying to figure out and beat markets. Like, if you think casually, like reading Twitter, that you can, beat the best investors in the world who are spending billions of dollars to try and win, like you're fooling yourself. Like, that's just all there is to it. There's a second question of, are you better off just holding stocks for the long run? And I think, I think that it's important to recognize that the experience that U.S.-based investors in particular have had over the last 40 years is the single greatest 40-year performance of stocks of any country, of any time frame in recorded history. Okay, so that was a pretty good outcome. If you were long stocks only, like only bought the NASDAQ, you'd feel pretty good about it. But that is an outlier. And so it's important to recognize that those outcomes are unusual that you've experienced, and therefore you wouldn't necessarily want to bet on those outcomes again. And even, I should emphasize, even during that period, let's say of the last 100 years in U.S. stocks, which, U.S. stock market return over the last 100 years is the single best, returning stock market in the world over that time frame. There were periods of 20 years where you were in drawdowns of real returns on your stocks. 20 years. Think about that. If you were down on your investment for 20 years, and this wasn't just back like in the 60s and 70s or in 1929 and beyond, this was as recent as the 2000s period, right? If you were, trust me, if you were sitting, I was there in March of 2009 when stocks bottomed, S&P 500 bottomed in the 600s. Like, you were like, shit, I had bought stocks in the tech bubble multiples higher than this, right? And that was years before, right? You were on a 20-year, you were down over a 20-year time frame. That can happen. That can happen with stocks. And if you have to prepare, you have to realize that that's the case. So stock for the long run is a terrible idea because you will experience that sort of loss over extended periods of time. And, that can be ruinous. Imagine you're on the day before retirement and you lose 2/3 of your assets. Like, that could ruin a person.